Welcome. Hey, what's going on, everybody? Good evening. It is Paul, the 920 Trader, with 920 Trading. Today is the 4th of March, 2025. And we're going to do some live trade reviews tonight. And if somebody in the group could go check YouTube just to make sure that we are coming through loud and clear. But anyway, folks, we are going to be doing trade reviews. We had really nice trades that happen, all really nice setups that happen all day, folks. Loud and clear. Thank you there, Pluto. Thank you. Really nice setups all day long, folks. Our major levels. We trade, for those of you that don't know, again, I'm Paul, 920 Trader, 920 Trading. For those of you that don't know, we trade the 920, which is SMAs. We use the 9 and 20 simple moving averages to generate buy and sell signals. Now, in addition to that, we use major levels. So what are major levels for us? Well, it's pre-market high, pre-market low. Also, 30-minute supply zones up top. It's a 30-minute double top. And 30-minute demand zones down low. Those are 30-minute double bottoms. So we use those. We like to take our trades out of major areas or major zones and major zones only. And the reason is actually very obvious. So, because something has happened there in the past, we're just trying to stack probabilities in our favor. Now, if you are not familiar with my style of trading, I've got a whole bunch of videos specifically on the strategy. So I did a video here a couple weeks ago that talked about the 4 different ways that we play the 920 crossover strategy. So go check that out. Yeah, go check that out. Yeah, we would appreciate that very much. So I'm going to share my screen with the group, and there we go. There is my screen, and I'm sharing my screen with the group. So right out of the gate this morning, again, we had the catalyst. Let's talk about the catalyst first. The catalyst today is obviously the market's been running down for, I don't know, about the last week and a half, 2 weeks, somewhere right around there. I think it's 2 weeks tomorrow, where Donald Trump, he started talking about tariffs. And as soon as the tariff talk started, we went from like 613 and bottomed out at like 570. So we lost a lot. And we're talking specifically about SPY. So we trade both SPY and SPX. We will be moving to different tickers, basically the Magnificent Seven, over the next several weeks. So if SPY's not doing anything, we have a lot of different options out there. Something's moving really well. We will take advantage of that. But anyway, so the catalyst today, again, it's tariffs. So today, tariffs were supposed to kick in for Canada, for Mexico, and for China. So, we've had all of these down days in the market, and today it didn't disappoint. I mean, kind of that same thing today. So, without further ado, I'm going to talk about that first trade right out of the gate this morning. Now, we will talk about trades other than my trades. My trades are mine, great, wonderful. But at the same time, let's talk about the other setups that happened during the trading day today. Because it's not about me, it's about the strategy, it's about the community. Now, if you're interested in live daily trading, the link for that is down below. We have a live trading Discord. It's called Trading Decoded. We are so confident that you'll find value in that. We will give you the first week for free. And did I say trading? I meant 920 trading. 920 trading. 920 trading. The link for that is down below. Thank you. I was associated with Jimmy for years and years. But anyway, 920 trading. The link for that is down below. We're so convinced that you will find value in it. Anyway, 920 trading. Now, if you are interested in the 920 crossover strategy, head on over to 920trading.com. The entire strategy is there. You don't have to spend any money on that. It's there for the entire world to see. So, if you like it, great, wonderful. But it's there at no cost to you other than a little bit of your time. So, let's get into, and again, that is 920trading.com. And the Discord is 920trading. And again, the link for that is down below. So, talk about the first trade out of the gate this morning. Now, generally speaking, what we like to see in our trades is we like to see what's called a fresh cross. So it's a fresh cross to either to the upside or the downside. So that means the 9 is already above the 20. We want that 9 to pull down below the 20. So as a general rule for puts, we use the 9 as resistance down to our major levels. And at that major level, we can determine whether we're going to take that trade off the table or let it run, depending on how the candles react or respond at those major levels. So The 9 is resistance on the way down. Now, for calls, the 9 is support on the way up. So that is how we look at it. So we're looking for a fresh cross this morning, and it didn't happen. The cross that we got, the fresh cross that we had, happened at about 9:18, so about 12 minutes after the market opened. So as you can see, what happened first thing in the morning, it ran down just a little bit through that pre-market low, ran back up just a little bit, and we had a couple of our traders, specifically Pluto, because I remember Pluto was saying, hey, I'm looking for a fishtail play. So the fishtail is the space between the 9 and the 20. That is one of the terms that I came up with. So he was looking for a fishtail play between the 9 and the 20. He took puts right in here. I was looking for a fresh cross or something lower to the downside. So anyway, he took this fishtail play and wrote it down. Now, for me, and again, I'll talk about a few of my trades, but more than anything, I'll talk about all of the different trades during the day. Took this trade right in here. Again, the close of 9:43. It turned around me a couple of minutes later, and it was running away pretty good. Had I waited for the close of the candle, and I knew that it was running away pretty hard. Had I waited till the close of the candle, I could have said, you know what, I'm still below VWAP. My cut was a close, a couple levels up, 579.03. So anyway, I cut it mid-candle. I was able to get back into the play. Now, I was looking at, and again, this is for me, 950. At 950 this morning, we're making this lower low over here. We're still below the 9. We tested the 20 back to the downside. This lower low over here, I put in a market order. My market order, it just spun and it spun and it spun. It did not fill. I closed my brokerage and I opened it back up and it said, okay, no orders were working. And I looked at it a couple minutes later and lo and behold, I was in puts. And I think my puts filled right in here at about 9:59. Now, if there's a big report that comes out at 10 o'clock, we're always aware of that, but we didn't have any reports today at 10 o'clock, so we weren't necessarily concerned about it. But anyway, this moved back to the downside. Again, it filled me here instead of where I wanted to be filled right here at 950. Filled me several minutes later. It filled it and it ran. Now, let's talk about specific levels and what happened at these specific levels. So let's talk about my levels first. If the level is marked, it's marked basically if it's like a 5-minute zone or a 10-minute zone or even up here the 2-day POC, which is the point of control, or a midline. Those will be marked. Every other line on the chart is a 30-minute zone. So you can just make the assumption that every other line, there's a lot of lines on the chart today. You can make the assumption that every other line on the chart is a 30-minute zone. So anyway, back to the downside, this trade, again, it just followed. And again, breached that 9, back to the upside, check the 20 right in here, and then it moved down through this midline right here. Now, I remember Sam asking me specifically right in here if I'd closed out my trade yet, because I think Sam probably closed his right around in here somewhere. Really, really nice trade to the downside, and I said, no, I just closed it out here. I think he asked me right in here. I waited. I gave it a little extra time to kind of run against me, but I just want to make sure that we weren't going to push down any more. Okay, next trade. Again, for me, I was looking at, again, major level. So we had this major level right here, 575.99. I wasn't quite sure what we were going to do, specifically at this major level. We rejected off this major level. Let's talk about the different ways to play this specific trade back to the downside. Again, it's about an hour into the trading day so far. And guys, feel free to ask any questions as I'm doing this. Okay, so the first candle right in here, 1034. Look at how it responded off this level, 575.99. And again, that could have been 575.99 or 576. We rejected off this line. Now, one of the 4 different ways to play the 920 crossover strategy is directly off of support or resistance before we have a cross to the upside or the downside. That is that candle right there. Again, 1034. That is, you're jumping the trade, no question about it. What you have to be aware of on a trade like this, when you jump a trade, is always watch the 9. Watch the 9 for support. to kick it back in the other direction. So again, this is the most aggressive way to play the 920 crossover strategy. Now the next candle, no, we're not going to take that green candle back to the downside. Now look at this candle again at 1036. And I'm not going to go over every single candle today. I'm just basically explaining how we do the different setups. Probably not going to take this 1036 either, only because we're directly above that 9. Now, next candle that we're looking for, or the next candle, 1039, we are in what's called the fishtail. So that's the space between the 9 and the 20. These are generally really, really good if you are following the trend. And again, we want to take that directly below a major level. The only issue that we have on this type of play on the fishtail is the 20. So when we're above the 20 acts as support, and it oftentimes pushes that price action, or forces that price action back to the upside. And again, I took this trade right in here, and again, let me move this out of the way just a little bit. We closed just at the 20, and then it automatically reversed on me. I had a stop. I mean, I was not going to let this thing go all the way up. I mean, that's a pretty big stop. But I had 45. I think it was 45, 575, 45. It was just this swing high right up here. We bounced around, and then a few minutes later, it finally decided to go back to the downside. This is what we consider, again, this is a dirty play in here. It's just up and down, up and down. Finally got a little bit of traction, moved back to the downside. And there it was. Anyway, let's. That's pretty much it for that trade. I closed out that trade right in here. I got back in right here and closed out for a loser here. So again, a couple of winners, a couple of losers today, and that's okay. That's how we do it. Here is the thing about the 920 strategy. It's a good strategy, but just like every other strategy out there, folks, there are other good strategies out there. You're going to have winning trades and you're going to have losing trades. So that's just the way it is. Now, next setup, folks, is actually back to the upside off of this midline here. You can see this midline, it touched it 1 time, 2 times, 3 times. Each time we got a little bit, right down. We kind of checked that area and then back to the upside. Look at this thing. I mean, price actions just ran and it ran and it ran and it ran and it ran some more. It ran up here, it ran up here. Now, I didn't take any of these trades in here, and I think I was just, there was at one point, I was just coming back from lunch. I don't remember specifically when I was just coming back from lunch, but I was coming back from lunch, and I think I was 2 or 3 minutes late into the trade. And had I taken it, it would have been a really, really good trade. So Pluto just asked, what is the midline? Where does it come from? And what is the importance of it? Okay, great question. So midline, I use, if I have too much space between major levels, I use what are called John Carter pivot points. So John Carter pivot points, they're just mathematical lines on the chart, and they're generally really, really good for both support and resistance depending on where we are. Again, it's called a John Carter pivot point. I call it a Jimmy Carter pivot point because I like to be funny. Anyway, if I have too much space between zones, I'm going to look for a midline, or what's called, this would be, I think, S3 down in here. That was the last level. Nope, that's not S3. Anyway, there are just different levels of support and resistance based on your midline, or based on the John Carter pivot points. Yeah, that is what the midline is. So you're welcome. You're very, very welcome. Hey, what's up, Pete? What's up, Jason? Good to see you guys. Now back to the upside again, folks. I was right around here, right around 1 o'clock today. I had determined earlier that I wanted to start doing YouTube live videos, and again, we're on YouTube live video right now. I determined earlier today that I wanted to start doing YouTube live videos to attract more people and see if we could attract some new folks to trade the 920 crossover strategy and maybe join us in our room, or at least take advantage of the 920 crossover strategy at 920trading.com. So in here, right in here, I was doing a YouTube live video. It was about 6 minutes long, and talking about this specific trade right here at 1303. So this trade right here, I want to go over this real quick and talk about why this was a really, really, really nice setup. So in order to determine whether it's a good setup or a bad setup, you have to kind of look left and see what has happened over the last maybe couple of hours. We had, again, we found this midline, kind of bottomed out on this midline, started pushing up, pushing up, pushing up, came down, tested VWAP, rejected off of VWAP. And by the way, this yellow line or this goldenrod line, this is called the POC. This is the point of control. This is the point at which most money has traded hands during the trading day. So it is right here, right now. It changes throughout the day depending on where the volume is. But let's talk about this specifically at 1303 and what made this such a good trade. Basically, over the last couple of hours or so, leading up to this hour and a half, we were trending back more to the upside. Now, we were still downtrending on the day, but again, we're trending up at this point during the day. So, this trade right here, this is called the double cross to the upside. Again, we opened below the 9 and closed above the 20, and we had just rejected back to the upside off of VWAP. So again, we're moving up, we get a double cross to the upside. So here is the reason, or here's the why behind the double cross to the upside. When you are above the 9 and the 20, both of those areas act as support. So you've got different areas of risk. If you want low risk, you use the 20 that you're above. If you reach the 20 back to the downside, you get out of the trade. If you're a little bit riskier, you use the 9 as support. If you reach the 9 to the downside, that is where you take yourself out of the trade. If you are even riskier yet, and hopefully we are right around a major level, you're going to use that candle, or you can use that major level as your stop. I got to take myself out of this trade. So again, that's why we use the 920, folks. Again, it just generates those. It's not so much that it generates those buy and sell signals. We use those major levels for that, but it gives us an area of support and resistance. And that's essentially what we're looking for, again, is that support and resistance. But anyway, I remember specifically calling this out as a double cross to the upside. And in at least the short term, it was running up. And just a couple minutes later, it ran. I think it was $1.50 over about 5 minutes. Let me see, 77.14. If you topped it out, 79, it was $2.50 in about 5 or 6 minutes. If you are an options trader on a $2 move, and you're trading one SPY contract at the money at a 0.5 delta, a $2 move over 6, 7, 8 minutes will make you approximately at a 0.5 delta, approximately $100 over 8 minutes. Again, that's a $2 move. It's probably going to be a little bit more than that because you have the delta on the first dollar move, which is going to be 50 cents. Then you add the gamma to that, not trying to go into the weeds too much, but you're going to add the gamma. So it's probably going to be closer to $110 to $115 in about 8 or 9 minutes off this simple double cross to the upside, where it basically topped out at yesterday's low. I mean, that's it right there, folks. That is why we want to put on that play. Again, if we are an uptrending day and we are at a major level and we get a double cross, we are stacking all of those probabilities in our favor. Again, what more do you want? You've got the 9, you've got the 20. In this case, you have VWAP. I don't think that POC was there at that point, but you have all of these probabilities that you are stacking in your favor. You are compelled at that point to put on the trade. And it's the same thing to the downside. If you have that same setup to the downside at a major level, you're downtrending, or you're at a very, very strong supply zone where it's reacted at that level before, you take the trade. What is up, Iceman? What's going on, man? But again, double cross to the upside, and 7 or 8 minutes later, it topped out. Banger, 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 banger. That was such a, that move right there. That move right there, I like that, Lighty, was a smooth move. I mean, it was very, 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 what's the word I'm looking? It was just straightforward. It was a very, very straightforward move. And again, I was setting up YouTube at this time to go YouTube live, so I didn't take this trade. Now, let's talk about, and you can play this thing back to the downside as a counter trend trade off of that area. A couple of different ways to play it. Fishtail through a couple of different levels, take it back to the downside, play it down to maybe VWAP if you can get to VWAP. Now, based on the fact, and again, I remember looking at this level right in here. I said, guys, if we can breach, I think the level was 576.83. If we breach 576.83 back to the downside, I think we got a good chance to go back down to 575.99. If we don't, if we find support, you can use that level as support, take it back to the upside, or wait until you get what's called a fishtail play. So let's talk about the fishtail play. Now, is everybody following me so far? That's my question. Again, I'm doing this for YouTube at the same time, but is everybody following me so far? Any questions? Okay. And again, if you guys have any questions, and I'll answer all the YouTube questions later if I have some of those. Perfect, perfect. By the way, Jim, I'm going to call out Jim real quick. Jim's in our group. Jim, I've got to call him out because Jim had his first profitable trade today in over a month. And that is absolutely awesome. Jim is a salt of the earth, wonderful guy, super, super sweet guy. And he had his first profitable trade since January 24th. And it is so awesome. And it was, and he said it earlier, he said he was so calm in the trade. So yeah. So anyway, back to this. And I'm going to get to your question here in just a second there, Pluto. Let's talk about this particular trade back to the upside real quick. Again, off of this support. So we're just going to use basic support and resistance for this, folks. Again, support back to the upside. Let's talk about this trade where potentially you could have taken this trade and the why behind taking these specific trades. Okay, so the space between the 9 and the 20, I call it the fishtail because sometimes it looks like the tail of a fish, so it's just very, very simple. So when you are in the fishtail and you put on a trade, again, we want to be above a major level for calls or below a major level for puts. When you are in the fishtail, again, we're an uptrending day, you get into the fishtail. The reason for the fishtail play is you are directly above the 9, and that 9 is there to give you support. Again, that's all that we use the 9 for, folks. It is support. And you can see how the 9, how price action just rides that 9, folks. We trust that 9 and we ride that 9. Again, so at this candle right here, 1332, fishtail play back to the upside. When we are in the fishtail, the only thing, well, I mean, there's obviously other things to worry about, but generally speaking, we're only worried about a couple of candles. We're worried about price action up to the 20 because a lot of times what will happen is it will reject directly off that 20 and kick it back to the downside. So once we get above that 20, we have two different areas of support. So again, you can see how it pulled back just a little bit. Pull back, pull back, pull back. Again, caught that support on the 21st. The 9 caught up with it, and then it ran back to the upside. Now, look at what this price action did. I know, again, I remember talking specifically through this trade right here, and I said, guys, depending on where you got in, and again, this is not financial advice, guys. The things that I say right here, they're just my opinion. I mean, that's literally all it is. It's just my opinion. But anyway, ran up, and it breached that 9 back to the upside. But we stayed above the major level. We tested the 20. And look at this, folks. Fishtail tested the 20, kicked it back in the opposite direction. Look what it did. I mean, that was a run. I think, what did it take, 30 minutes, 40 minutes, something like that. But again, look at this run back to the upside. Another run here, pull back. It just ran and it ran. Again, fresh crosses all day long, folks. All day long were fresh crosses at those major levels. Now, what I do a lot of the time, folks, is once I get into that trade, I'm going to look at that higher time frame. So again, let's look at that 5 minute. This is a 5 minute right here. So look what it did. I mean, just super much cleaner over the last couple of weeks than it has been. So what we like to do is we like to execute on the 1 minute because we get more surgical entries on the 1 minute, and then switch over to that higher time frame for trend confirmation. But look at this. I mean, price, it just ran and it ran some more. Now, look what it did up here. And I remember I stepped back. I stepped aside for a few minutes. Right in here, I said, guys, I'll be back. You know, I got some stuff to do before you know, the last part of the market. I ran up. We kissed pre-market high, folks. That's why we use pre-market high. Again, pre-market high, pre-market low. 30-minute demand zones down low and 30-minute supply zones up top. We kissed pre-market high, and then it ran down, and then we got a whole bunch of volume again, and it just ran. And a lot of these are catalyst driven. You know, if Trump says one thing one thing that the market doesn't like, it just happens, folks. That's just the way it is, or it's just massive profit taking at this. We never know. We can think we know the why behind the moves, and if it's something pretty big catalyst, we understand that. But a lot of times we don't. I mean, we just speculate. But again, let's talk about different ways to play this right here. You probably don't want to play this play, in my opinion, unless you're being super aggressive. You don't want to play it directly off that pre-market high when you are above the 9. You want to wait at least till you get to the fishtail. So again, fishtail right in here at 1528 and then 1529. Both of those are those are the candles to get into that trade. 99 times out of 100, you want to take one of those two candles right there. Again, you kissed that pre-market high, you came down, you have your 9, and then you got down below the 20. Again, we use the 9 and we use the 20. Again, it's resistance on the way back down. But look at these, just banger, 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 back to the downside. And again, I missed this. So I waited for a pullback, a little pullback. And again, this was just me, and it took a massive play back to the downside. We had a few of our members that that got in a little bit earlier, I think a candle before I did, and ran it down, I think 10, 11x their trades, trading SPX, and that's what I trade. I trade SPX. But yeah, big trades back to the downside. But yeah, and then you're obviously not going to take anything this late in the day. It's 5 minutes or 3 minutes left to play. There's really nothing there to trade. Now, question. Pluto had a question. That stuff around 1044 this morning messed you up? Dollar moves? Yes. Yeah, I know. So 1045 or 1044, let's go back over there. Because, let me see, 1045 or 945? Yeah, right in here. Yep, because I was in that trade. In here. That should be over here. I was in that trade. So yeah, I know exactly what you're talking about, man. I know exactly what you're talking about. $1 every minute. It was crazy. And I know Joe was also in this trade, and Joe stopped out. Joe got into this trade 3 different times. I think 3 different times. He had 1 winner and 2 losers inside about 15 minutes on this, 15 to 20 minutes. So I remember that very, very well. Anyway, price action during this, that's really the only bad price action during the day. There was a little bit dirty stuff, but that was pretty much it. Now, you can, and it can, Pluto just said you can really get your emotions to, your emotions can really get the better of you, and they can. This is a really, it's a difficult thing to do. Trading is very difficult. But it's the emotional part. The emotional part will really mess with you. It will absolutely mess with you. Okay, now, who wants to jump on here? And Jim, did you want to open up your mic? Did you want to talk about your trade? I would love to have you on and talk about your trade. If you can. If you're at work, I think you might be at work. If you're at work, I understand you probably can't do that. You're at work. Okay, I understand. Okay, now, who would like to get on the mic and specifically talk about one of their trades? We can go over whatever trade you're in, whether it worked out or whether it didn't. Maybe you have some questions. Who would like to jump on there? Anyone? MJK, yeah, you are the one. Crickets. Pete. Now we're waiting for Kyle and MJK. Kyle wants to jump on here. I know you do, Kyle. I think we got 20 people in the group tonight that are watching. I don't know how many watching in YouTube land. If somebody can give me that number, that would be awesome. Broke all the rules. Kyle, we do. We do want to hear about it. Can you jump on for a minute? Can I bring you in? Kyle just said he broke all the rules. Y'all don't want to hear about that mess. I think we do. Honestly, we do. Because 11. Okay, perfect. Thank you. By the way, I need to say hi to Sebastian out there. What's up, Seabass? Yeah, now 20. Perfect. Yeah, what's up, Seabass? Good to see you. Yeah. How's it going? I know it's Sebastian. and they called you sea bass in Nam. So I'm giving you a salute and saying hi. Okay, so who would like to talk specifically about a trade? Sam, did you have a trade that you were in today that you'd like to talk about? I've been breaking rules for over. Okay, all right. Well, come on, Sam. Let's go. Sam, what's happening?
Hey, Paul. It was busy day for me.
Yeah, I saw that you were in and probably taking a little bit of time, but I know, man, I know that you stayed in this trade, the one that I was in. I know that you stayed in that thing early. What time did you get into that trade, Sam?
I got in on that one at 9:42.
9:42. Okay, I got in right after the close of 9:42, only because it broke low right there. Um,
And
and-
believe it or not, I struggled on it. I was red little bit, and I ended getting out at 575 or 4, which is my target. Even I put it down for everyone to see. I said the target is
I
575.
remember, I remember, yeah.
Went out there.
Yeah, I
It,
remember exactly when you called that out. I remember seeing that. You said, I'm looking for 575. You took it off the table. Man, that was such a good trade, though, Sam. I mean, you trusted it. You trusted VWAP to kind of hold you back to the downside. That's where I saw that thing just running away and I punched out. Could have stayed in it, but I saw it running away pretty good. Um,
Yeah, I stayed in it. I stayed in it. My indicator was red, and I said, let me stay. If it goes above the VWAP, I will get out. It
yeah.
tried, it did not close above it, so I stayed, and it pays off very good.
And you,
And I take another one, a continuation on the same run
yeah.
at 10:15, 10:14.
Okay, 1014. Yeah.
Yeah,
Oh,
and
yeah.
I took it only to 572.71, and also it was not bad.
That's a beautiful trade, man. That is a beautiful trade.
Uh,
So at 1014 specifically, what got you in? Because I was already in that trade. What got you into that trade at that time?
you see, my indicators changed the candle color to red.
Yep,
So once the candle rebounded from the 20,
yep,
got rejected, and then came back to reclaim the 9, my indicator shows it's red.
yeah,
So I got in right away on that candle right away on the 9 or 10:14 in the end.
yeah. So essentially, you kissed the 20. Your indicator said you're red. You jump back in on a continuation. That's such a good
Exactly.
trade, Sam. That's such a good trade, man. That's such a good
Yeah.
trade.
Yeah. If you started from the top, went down all the way to 575, and then went white
Hmm.
for me, and when it turned back to red, I got in, and I took nine transactions today.
Oh, is
One of
that
them,
right?
yeah,
Oh,
one of them red.
the trades were there, man. The setups were there all day long.
Yeah, I my red one was at 10, 11, 11:23.
I'm looking at it right here, 1123. Yeah, that big candle is double cross the downside right at that midline. Um,
Exactly.
yes.
I was green for a while,
Yep.
and then it went back. I let it go around on the candle 11:30.
Yeah, I'm looking at that candle right there. Yeah, so I really kind of thought we'd take out that 570.28 today for some reason. Um, I don't know why. I mean, that midline, it held really strong as support, and there were some good plays off of it.
Yeah, I was thinking that it will break that line, knowing that the bad news and things like that.
Yeah,
So
and we've
it
got
did not.
Trump tonight
Yeah,
at 9 o'clock. So our futures are probably going to go crazy tonight.
yeah. And I took another one at 12:10.
12:10. I'm just probably going to go to that right in here. I got it right here, Sam, on the double cross.
Yeah,
Oh
yeah. I
yeah.
got that. And this was a very good one. I stayed in it until 577.85.
Oh, nice trade, Sam. Yeah, I'm looking
That's
at that right there. That's
good one
beautiful.
too. I took another one
Huh?
at the break of the resistance at 1310.
1310. Okay. Yeah, yeah, yep.
Yeah, here, and I got out three candles after that.
That's a nice scalp right there, Sam. That is really,
Yes.
really nice. Particularly after we got above that pre-market high and then that level at 579.03 on volume, on really, really good volume.
I took another one after we broke resistance, the 580.03, when we closed above it at 1356.
1356. I'm going to it right now. I got you. Yeah, yeah, yeah. Oh yeah. Yeah, so we got
I
above yesterday's low. Yeah.
Yeah, and I went all the way to 582.07.
Ow! Hoo-hoo!
It was
Sam,
very
I
good.
think you did well today, man.
Well, Paul, you remember when I used to tell you this job makes you money more than a doctor,
Yes.
attorney, and
Oh, yes.
engineer combined.
Absolutely it does. You we are both living examples of that, my friend. We got
Yeah, I
people in our group right now. Let me see, is he still here? Yeah, we've got multiple people that are on the group right now that can absolutely attest to that. So here's the thing, and I'm talking to you two. I'm talking to you, Sam, but I'm also talking to our group, and um, I'm talking to the YouTube folks also. This is you have the opportunity in front of you right now, like nobody in the history of mankind has had until now. I mean, you have all the technology, you have all the education, you have the spreads have never been tighter. Commissions have never been lower. There's never been a better time to do this than there is right now, and we are all taking advantage of it. So the folks on YouTube land, again, if you're interested in the live daily trading, 920 trading, the link for that is down below. And Sam, you and I have first talked well over 2 years ago, and I remember that very, very that specific conversation. So definite changes in fortune over the last 2 years.
and the last I had a very good 6 months, but January was a little bit tough for me.
That was a
But
bad month. Yep.
January I had more red than green,
Yeah.
but I rebounded. But I took also the last two transaction on the run. Those are scalping in the end of the day.
Oh yeah. Yeah.
I did not touch the rejections of the high of the day.
Yeah.
I jumped in at 1537.
1530. I went right to it, Sam. I went right to it.
I jumped on after we broke that structure,
Yeah.
and I scalped it all the way to 578.96.
Oh, Sam, that is so incredible. So
It was
incredible.
very good one. Very, and you know what? It's I don't gamble with this, just because it's the end of the day, and the volatility was very high.
Absolutely. Absolutely.
And we usually SPX at that time usually a couple of dollar or dollar.
Oh yeah. Yeah.
Today
And
it
they
was
were
like
they were a lot more than
$5.
that today. I can attest to that.
Yeah, it was like over $5 a strike. So
Oh yeah.
it's not easy.
Yeah. So
If
for
you,
those
you have to
for
do
those
a contract at
unaware,
the end of the day.
when you're talking about a $5 option, it's 5 times 100, so it's a $500 contract, and they move rather quickly. So yeah.
Yeah, and it goes back against you
Oh yeah.
very fast. So
Oh
if
yeah.
you want to pay that, you have to be ready to lose all the money.
You do. You do. And
So I did
we've
only
both done
one
that enough.
contract. I did one contract on this one and one contract under the VWAP.
Oh yeah. Oh
And
nice, nice. I like it. Oh,
I took
that
that
trade
one.
under VWAP. Hoo, 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 hoo.
Yeah, I took that under VWAP and I got out exactly where you got out.
No, perfect. Yeah, because it was starting to turn, and I just remember saying, "Man, I don't like this thing." And then it's a good thing we took ourselves out right there, Sam.
Yeah. It was green, and those are the one. That's the nine that I did today.
That's
One
awesome.
red and eight green.
That's a really good day, Sam. We're going to do it again tomorrow. Thank you for sharing. And by the way, for everybody out there, Sam is a very, very, very good friend of mine. Sam is awesome. He's a really, really great trader, but he's an even better person. So anyway, thank you for everything, Sam.
No problem.
All right, thank you.
This
Oh, I just cut him off. I just cut him off. I'm sorry, Sam. I didn't mean to do that. Here, I'm going to bring you back. I cut you off, Sam. I'm sorry.
Oh, it's okay,
Okay,
Paul. It's
I got
okay.
you. I got you.
It's
You're
okay, man.
back.
No, it's okay. Now, I don't want to take more of your time, though. It's your show.
Your show too, man. Your show too. But anyway, thank you for everything, Sam.
No problem.
Okay. All right. What's up, Los Tex, man? Los Tex. I referenced Los Tex in a video. Yeah, I know it's bad for me to cut him off. I mentioned Los Tex in a video here a couple of months ago. And it was specifically, and I wrote it down, and I still remember that. And he said, let's just say hesitation is not my issue. Okay. Um, Thank you, Pete. Thank you, Pete. Thank you, Pete. I'm glad I found Los Tex. You're on my list to call, man. You're on my list to call. It's all good, man. We're here. We're here. The band's back together. We are right here, my friend, and doing a lot of good things. Doing a lot of really, really good things. And again, glad you're here. Glad you're here. Okay, who wants to talk about that next trade, folks? You don't have to jump on the mic. That is absolutely not necessary. But if you have a specific trade that you want to talk about, give me the time, and I can go over that trade to the best of my ability. What's up, Jason? Good to see you. And Mark, what's up? And next question. Next question. As a group, are these? And we're going to do these every day, guys. We're going to do them every day. 9:35, 8. Okay, so 9:35 calls. Okay. 9:35 calls. Man. Okay, Kyle. Um, I, I don't think that was a bad play. Um, you just jumped, and I know you really, really like to jump trades. Um, you got that double bottom, you've got those tails on the bottom, so you got some buying pressure. A couple of candles, two, three candles in, and it ran up on you. I think what, a dollar or so, 78.80. 70. It ran up over a dollar in like 5 or 6 minutes. Um, did you hold on too late, or did you hold on too, and then you? Oh no! So Kyle, that's derivatives executioner. He oh, one of those. He just said he got in the shower. So he opened his position on a zero DTE, and it was going in his direction, thinking that it's probably going to run up all day because by golly, it can't run down all day. And then he took a shower. ah, ah, okay. So okay, all right. Oh my goodness. Okay. So then he DCA'd. That's called dollar cost averaging. He dollar cost averaged nine more. Oh, sold out at 3:25 p.m. and made $30. Well, Kyle, yeah, and I'll ask that here, and thank you for that question. But Kyle, you know what you did, man. Yeah, he got in the shower first 15 minutes of the day. Um, I got you. Okay, now, hot water or cold is probably he's in a cold climate, so yeah. Oh, code. Um, I will here in just a second. I'm going to ask that question here in just a second, Sam. Um, Let me see. Talk about the basic price action for a minute. At 15:25 today, when we whipped up through pre-market high trigger. Okay, the massive rundown. There are literally that many market orders sitting there from the big boys trigger the $9 move. Okay, we can again. Let's go to this move off the top. We can, because this is pre-market high, folks. Again, let me show you this on the 5 minute. Again, pre-market high. So for some reason at pre-market, they set this level, 585.31. So they set this level up here, and it rejected out of that in pre-market. That's why we use that DCA, dollar cost average. You're averaging into a bad, well, you can DCA into a good position, but we generally don't like to DCA or dollar cost average into a bad position. Okay, so again, let's talk about this pre-market high again. And the question was, talk about basic price action for a minute at 15.25 today, right in here. Let me get back to that 1 minute. 15.25 today, when we wicked up through pre-market high, triggering that massive run down. Are there literally that many market orders sitting there from the big boys to trigger a $9 move? My answer is maybe. I can speculate and said, oh yeah, it ran down because now, a lot of the times, particularly early in the day, we can use pre-market high or pre-market low if it hits early enough to take a reversal out of that area and then take it in the other direction. So we can do that, nerd. We can do that early in the day. Late in the day, I mean, it kind of appears as that's kind of the case. Was it profit taking? I mean, 585.21. I maybe it was. I can go back to. I mean, we look back at the financial juice, and I think that we're talking about. I think Trudeau might have been on at that time, or a little bit earlier, something like that. But anyway, it rejected out of that area. We could look at something like Bookmap to determine how many orders were sitting there. But the problem with Bookmap, if you guys look at Bookmap, they can spoof orders, so they can spoof the tape. They can spoof the tape. They're not supposed to, but they do. So again, we can speculate and say, yeah, there are a lot of orders sitting up there, just an automatic sell at that level. You can see about 5 minutes into that run, the volume really started picking up. Late day profit taking, it started to collapse, and then they just shorted it back down into oblivion or took profit. One of those two things. So anyway, maybe Big Bass. I don't know. I don't know. Again, I'm just speculating. Bunch of spoofers. Yeah, they do. Spot Gamma is good if you want to read the tape. Yeah, if you guys are into tape reading or anything like that, I mean, it's certainly have your way with it. Have your way with it. Okay, and code yellow DCA'd. So you averaged into a bad position or positions today. Their code you did. And again, hopefully not too bad. Hopefully not too bad. And again, let's talk about that real quick. Dollar cost averaging, generally speaking, it was bad. Okay, all right. Well, you got my number. Call me. Not today, not tonight. We can talk over the weekend. When you, and again, oh, you're still green. Okay. Nevertheless, one of the biggest trading errors is I got it. I see it. One of the biggest trading errors is number one, not predefining your risk before you ever put on a trade. Before you ever put on a trade, you must predefine your risk. If you hit that level of risk, and it can be a mechanical stop or it can be a mental stop. I don't use mechanical stops only because I don't like to get wicks to take me up, to take me out up top, and I don't like tails to take me out down bottom. So if I hit that level now, again, I closed out of that trade earlier today only because it started to run away from me. Generally, I wait for the candle close. But generally speaking, when you DCA or when your dollar cost average or average into a losing trade, you've already blown past your stop. So you are basically holding and hoping that at that point, and you're adding almost good money after, well, it's not almost good money after bad. And I understand you only do it in the morning, but it's a really bad habit. If you hit your predetermined level of risk, you are compelled to take yourself out of the trade. You have to take yourself out of the trade. Guys, you cannot grow your capital unless you first protect your capital. Again, and I know, and I'm not just speaking to you, Code. I'm talking to everybody out there that may be listening or will be listening or watching this video at some point. And sometimes it does work. Sometimes it absolutely does work. As a matter of fact, we had one of our members last year. I talked to him about a year ago, and he was talking about how I think he had 20 or 25 SPX contracts. SPX contracts, it's basically the equivalent, one SPX is equivalent to 10 SPY contracts. I think he had 20 or 25 of these things, and he sat on a losing position all day long. And I think he was prepared for that losing position, for that position to go to zero. And this was probably a $20,000 position. It went against him all day long. And finally, with about 30 minutes left in the day, yeah, with about 30 minutes left in the day, it started to turn around on him. And he looked at his P&L and he was getting closer to break even. And then he got to break even. And then he was up $600 on the trade. And what did he do? You guys already know what he did, and you know how this story ends, but what did he do? Because code just says ha ha ha. You guys know what he did. He sat on a losing position all day long. Yes, ICE, he did sell. He sat on a losing position all day long. He made $600, which is $600 is a lot of money. That's a good day. But 5 minutes later, had he held on to his position for 5 minutes later, because he was fearful at that point, he hoped all day long that it would come back to pick him up, and it did eventually. Again, he broke every rule during the trading day, and it eventually came back. Through his hope and price action, it came back, it picked him up. And he sold for $600 because he was fearful. He was ready to lose $20,000 because he hoped. But then he was $600 on the green side and he became fearful. 5 minutes later, you know how much money he puts in his pocket? You guys already know the ending to this story because, again, hope and fear, those are the two emotions that will destroy you as a trader. You already know, because if you trade any kind of position size whatsoever, folks, you know the power of 20 SPX contracts. When you go from underwater to make to $600, it doesn't take that much to kick you over the edge. He would have made over $20,000 had he stayed in that trade another 5 minutes, but his own fear took him out of the trade. Again, number one, he broke all of his rules. He was ready to go to zero, but then he said, you know what, I'm okay. And a lot of people would say, you know what, I'm okay, just breaking even or making a little bit of money. No, that's not true. Because 5 minutes later, it's $20,000 in his pocket. Anyway, who has another trade that they want to talk about today? And again, folks, that is an absolute, don't tell untrue stories. That's true stories. Today you have gained 1.6 million. Well, Code, at least you came out on the good side, and I know your position size, so yeah, but tomorrow you will, my friend, tomorrow you will. Who wants to talk about another trade, folks? Who wants to talk about another trade? And again, we can talk about DCAing, we can talk about whatever you guys want to talk about. Yeah. You got to go eat. Code, have a great evening, my friend. We will see you tomorrow. Calvin, did you do anything today? Yes, that is true, Lighty. That is a true thing. I just saw your message, Ice, in the Hang 10 room. That's awesome. Red. Okay. It's going to hold a position after my account builds up. Oh, never trade. Shut up, dang. Easier. What was that, Pete? It's easier to hold a position after your account builds up. Yeah, I would agree with that. That's why we trade small positions. We trade that single SPY contract. Again, folks, 20 trade challenge. 20 trade challenge essentially says this. You trade a single SPY contract. Is going to be, I'm at 300. Is it? It is. It is. It's absolutely easier to hold on your positions. But again, 20 trade challenge, folks, it goes like this. You trade a single SPY contract for 20 trades in a row. You do not break your rules, and you do not change any of the variables. If you do either one of those things, you start over. It's going to take you approximately 2 months to go through that process with a single SPY contract. The purpose of the 20 trade challenge is not to make money. The purpose of that 20 trade challenge is to get into your head to follow the rules and be disciplined. So it's rules, 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 discipline, discipline, discipline. If you can't follow your rules, and if you can't be disciplined with a single SPY contract, you can't do it with 3 or 5 or 7 or SPX or whatever you want to trade. If you can't follow your simple, basic, written down, specific rules for 20 consecutive trades, you have no business trading a larger position size than a single contract. Now, once you do that, 20 trades, you move to 2 contracts. And then you do it again for 20 trades. That first time is going to take you 2 months. After that, it's going to take you a month to go through 2, then 3, then 5, then 7. Ice, love you too, man. Go enjoy, go eat, and get your beer, my friend. It's going to take you about 6 months to get through that process. If you are, now here's the thing. If you're a relatively new trader, it will take you less time. Here's why. Because new traders typically don't have bad habits and scar tissue. The longer you have been trading, exactly, Kyle, the longer you have been trading, particularly if you haven't been profitable, the longer it's going to take you to get through that 20 trade challenge. Because you got bad habits and you have scar tissue, and those things take time to get rid of. Again, trust me on the 20 trade challenge. Trust me on that. Okay, who has another trade that they want to talk about, folks? It is just about 8 o'clock on the Eastern Seaboard, 7 o'clock where I am, Central Time. So, Calvin, what time was your trade today, man? What time was your trade? See if we can go through that here real quick. I'm happy to do that. And cold lemons. That's my man, Kurt. And again, I'm saying hi to Sebastian. What's up, Seabass? I hope you're watching. Yeah, and Jim just says you can attest to the scar tissue. But again, Jim, congratulations on your execution today, man. First trade, first green trade, first profitable trade since January 24th, and his third profitable trade of the year. Again, we build on the execution. We build on the good execution, folks. It's all about the execution. Results happen as a result of the execution, not the other way around. The results are a direct result of the discipline and the execution. On YouTube, Armando has a question about what indicator Sam uses. Oh, okay. Yeah. Sam has his own proprietary, indicator that is probably available on TradingView. Hey, Sam, are you okay with me showing your indicator? And hi, Armando. How's it going? And I will, and moving forward, I'll figure out how to see the messages in real time, folks, on YouTube. But what you can do, again, you can take advantage of the free week and come on over to 920 Trading, our trading Discord. The link for that is down below. And again, so we do this live all day long. We do it live all day long. We talk about these trades, and this is how I am 100% of the time. It's again, this is how we talk through the trades all day long. Man, we can do that. We can absolutely. I'm in. I mean, obviously, I'm in. We can do that, guys. No. What we'll do is we'll go to Battle Creek Golf Club. We'll go to Battle Creek Golf Club, and they've got a meeting room, and that's my place. So we can do that, and we can trade, and then if you guys want to play golf in the afternoon, we can do that. So yes. And again, Sam, are you okay with me sharing? Looking back, I have to admit I was trading 920 without understanding what price action was, doing a lot of time in the entry. Yes. So Jim just makes a really, really good point. He said, I have to admit, I was trading the 920 without understanding what price action was doing at the time of an entry. Price action is making a difference in my entry with the 920. Again, folks, price action is basic to what we do, and we have to understand price action. Again, we use price action. We use the 9 and the 20 for support and resistance. We trade off those major levels in the 920. That's what we do. Just came in. What about golf? We'll do maybe a get together at some point. Everybody comes here, and we'll have Ron's Hamburgers too, Lighty. Everybody comes here. We'll powwow and we'll trade for a day or two, and then we'll play golf in the afternoon at my club. So yeah, we can do that. Okay, so Los Tex, and I'm very serious about that, guys. Trade puts this morning in DCA 2 times. Was profitable, very profitable. I want to know if it was just my put bias or was it actually seeing the chart as it was. Initial position. Okay, so initial position at 932. Let's go to 932. Okay, so 932. That's again 932. I like it. Okay. Again, you're breaching a couple of different. You got 578.75. So yes, all right, got that. Oh, you're trading Qs. You're trading the Qs. Okay. I don't know if the Qs were mirroring SPY or SPY was mirroring the Qs today. I suppose I could pull up the Qs chart. How about that? So I will pull up the Qs. I'll go to the 1 minute. And that way. Okay, yeah, so it looks like the Qs or the SPY, they were mirroring each other. Okay, so, and again, Los Tex just says, trade puts this morning DCA 2 times. So he dollar cost averaged 2 different times today. Initial position at 932. So the close of 932 or the open of 932, Los? Probably the close of 932. Oh, Adrian, I'm glad you're here. I will explain the risk, how I calculate risk. I'll explain that here in just a second. Okay, so I'm going to make the assumption, Los Tex, that you took a position on the close of 932. It reversed on you. DCA'd at 934, 2 contracts. Again, you got that rejection off of VWAP, so you're DCAing contracts here at 934. DCA'd at 939 again. I went right to it, man. Went right through it. And you exited entirely at 1020. I like your exit. I'm literally going right to that level. And the question was it your put bias? I don't know. Okay, so the close of the candle. I don't know if it was a put bias or not. But you know my question already, Los Tex. Where was your risk? Where was your risk on that? It was a long way away, because let me see here. We got 92.47, and it ran up to. Whew, is that right? Did it run $4 away from you? It literally ran $4 away from you. Holy cow! Holy cow! Okay, so yeah, I mean, you already know what I'm going to say. It ran way too far, in my opinion. I get that. I mean, I was in puts and I had to close out that trade. So yeah, I get that. It worked. I think you should have closed the trade and got back in at some point. That's my opinion. That's my opinion on it. I don't like the idea of dollar cost averaging or averaging into a losing trade. I don't think that's bright. But again, that's just me. That's just me. Yeah, and again, it looks like they pretty much mirrored, pretty close. I could pull it up. Yeah, they're fairly close. They're fairly close. Okay, so Adrian on YouTube asks, how do you calculate risk in regard to each trade? Yeah, so no more DCAing, folks. If you hit your level of risk, you take yourself out of the trade. Okay, so how do I? Okay, so Adrian, this is how I like to take my trades. Either directly above or directly below a major level. So again, let's talk about this first trade right in here. Not a fresh cross, but again, we're making that lower low. I had these two levels right above me. I wasn't using VWAP. Sam used VWAP. Sam used VWAP. I didn't, and it was running away from me, so I closed it out. So generally speaking, two things. We want to be as close as possible to that major level. That's our stop. Or the 9 is our stop, and the closer we can get that 9 to that major level. We trade what's called the double cross to the upside or the downside, and and let me show you the quintessential double cross. I talked about this trade earlier from a risk standpoint, double cross to the upside at 1303. So the risk, we can talk about the the different levels of risk specifically on this trade right here, because this almost beautifully shows us where our levels of risk are. Now, this is the POC. This goldenrod line right here is the POC, point of control, point at which most money based on price had been, most shares based on price have been traded during the day. I'll show you something else also. It's called volume profile. But again, double cross to the upside, you have basically 4 different levels of risk. So your first level of risk is directly below you. See again, this candle 1303. You got your 20 directly below you. Okay, so if you don't want to take a lot of risk, you breach that 20 back to the downside, you take your trade off the table. And it's going to be trade dependent. And again, the closer you are to the 9, the better off you're going to be. The 9 is ultimately where you want to close out the trade if it goes against you. So that's the first level of risk, is the 20. The next level of risk down below is the 9. And again, that's why we use it. That's why we use the 9 and 20 at support and resistance. Now, your next level down, this is called an ignition candle. So the candle that got you into the trade can be the same candle that will take you out of the trade. If you are living, and it's not really necessarily living on the edge, but if you want to take on the most risk, you've got, well, the second most risk, you've got VWAP directly below you, okay? Now, for the most risk, you've got a major level right here at, let's call it 576. So 576, and you entered at 577.14. So essentially, your highest level of risk is $1 away from you. If you're trading a single SPY contract, when a move go at a 0.5 delta, a move that goes against you $1, you're not going to lose 0.5 delta. You're going to lose a heck of a lot more, probably closer to 65 cents or 65%, 65 cents per dollar of that, or 65 cents total out of that trade, if you take it back down to that $1 move back to the downside. So again, we predefine that risk, and it does. It works both ways. But see, here's the thing. When they move against you, they move against you harder than when they move in your favor. That's just the reality. A $1 move on a 0.5 delta, on a single SPY contract, 0.5 delta, you'll make about $50 if it happens quickly enough, because then you have theta, which is the time decay of money. But when they move against you, they move against you harder than they move in your favor, at least until you get way into the money. So what's the ideal delta to trade? That is a wonderful, wonderful, wonderful question there, Pluto. 0.5 delta or greater. 0.5 delta or greater. Here is the provision to that. So because you generally get good movement out of 0.5 delta. We can also use, and I know people in here regularly and I know Sam uses this regularly. It's been around forever and ever and ever, and that's on 0 DTEs. That's correct, Deep. This strategy has been around for as long as options have been around. It's called the delta multiplier. So if you do not want to trade, or if you're looking for more leverage, go 2 or 3 spots out of the money and find a single contract. If you can find a single contract, a couple of spots out of the money at a point, like let's say 0.25 or 0.3 delta, and for a third of the cost of a 0.5 delta, you buy 3 contracts that gives you 3 times the leverage for the same cost of 1 contract in the money. Now, if it's a fast moving, and that's per, so if you're trading 10, you're going to go to 30. Now, the downside to that is if it does not move, you're going to get smashed in the other direction. But again, if you've got fast movers, I used to do the delta multiplier on Tuesdays and Thursdays. So on Tuesdays and Thursdays, back when I was trading SPY, this was a few years ago, they only had Monday, Wednesday, and Friday expiration. So Tuesdays we traded Wednesdays, and Thursday we traded Fridays. So, but now we got, expirations or daily expirations. So what about using one DT? Yeah, you can use one day to expiration. So tomorrow expiration, you can use those. Just get close to in the money, or you don't even necessarily have to get in the money, but the further you are out of the money, those things will move and depend on what it does. If you're holding those overnight, good luck. Oh, well, thank you, Adrian. I appreciate that. Does that answer your question? And thank you for that, Kurt. Seriously, thank you. Um, yeah, we're still going. Anyway, any other questions tonight? Any other questions? I got Pluto. Have a great. Thank you. I appreciate that. Have a great evening, man. Seriously, have a great evening. Any other questions from the group or maybe out there in YouTube land? But hey, Adrian, come check us out. Seriously, we're going to give you that first week for free. Live daily trading. So yeah, and again, the link for that is down below. Again, 920 trading. You can get the strategy at 920trading.com. While you are there, sign up for the newsletter. So I do a newsletter every Saturday and a corresponding video that comes out with that also. No cost. No cost. All right, Code, what you got? What you got? Oh, Strangles. I got you. I got you, Rick. I got you. Anyway, click on the button, man. Click on the button. Come check us out. Love to have you. At least give us a shot. What do you got to lose? We'll make you a better trader. All right. Rick, man, dude, thank you. Thank you. I'm really glad you're, and that goes for everybody in the group. I am so glad that you guys are here. You have no idea. You have no idea. Usually 10 large candles. What about volume like these days? Usually. Yeah, okay, so generally I have a rule that I don't like to take a position on big candles. Generally speaking, that is kind of the rule, only because on those big candles, when you get a big candle, a couple of different things happens. A couple of different things happen. Number one, on a big candle, implied volatility necessarily increases. So unless, if you take a position on that, you're probably going to get a pullback. So on a pullback, your IV will go down. So you're going to lose value on the IV and you're going to lose value on the pullback. So you're losing two different ways. So don't take a position on a big candle, 60, 70, 80 cent candle. Now, the only provision to that is, let's say you got 50% above a major level and 50% below a major level, then you can predefine that risk and then still wait for a pullback. Lady Val would like a quick breakdown of the 20 trade. Yeah! So Lady Val, Dan, here's the breakdown of the 20 trade challenge. The 20, and I'll send it to you. I'll send it to you. I'm happy. Well, actually, just go to 920trading.com. 920trading.com. The link for that is down below, but I'll break it down for you. And I'll show you in just a. It's going to be on your broker, but I will show you that here in just a second. So, Lady Val, here's a 20 trade challenge. You're going to trade a single. If you trade SPY, stay with SPY. If you trade the Qs or whatever specifically, even if if you're not trading options, if you're trading equities or you're trading crypto or trading futures, whatever it is that you're trading, here's what I want you to do. If you're whatever position size you're trading right now, if you're a pro level trader, it doesn't matter. Keep on doing what you're doing. But even this, if you're a pro level trader, this will make you better. What I like people to do is trade a single SPY, a single contract, or a single share. So what you're going to do for 20, number one, you're going to have written a written trading plan. So 100% of your trading plan must be written, and it must be specific. You have to know specifically when and why you're getting into a trade, and specifically when and why you're getting out of the trade. Everything about that plan, the more specific you can be, the better off you will be as a trader. It's going to build a lot of discipline in your everyday trading habits. So here's what you're going to do: a single SPY contract. We're talking about SPY because a lot of people trade SPY or SPX. You're going to trade 20 consecutive trades following your plan 100% without breaking any trading rules. Not one. Now, that's on entries, that's on exits, that's on every part of your trading plan. Follow it to the letter of the law. If you break your trading rules, if you break any specific rule, or you change the variables, you're starting over at number one. The length of time that it takes you to get through that 20 trade challenge is absolutely immaterial. It doesn't matter. The only thing that matters is you get through that process. Again, you're not going to get through that first time. I've never known anybody to get it through it. That first time, it's like, this is easy. No, it's not. It's not. It's not supposed to be easy. If this was easy, man, everybody'd be doing it. It's not easy, but it is doable. It is doable. Now, once you have completed that 20 trade challenge, you're not going to stop. You're going to increase your position size to 2 contracts, and then you're going to start over. If you break your trading plan or break your rules, you're going back to number 1 on 2 contracts, and then 20 trades, and then you're going to go to 3, and then you're going to go to 5, and then you're going to go to 7, and then move up to SPX. You don't have to go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 SPX. No, 1, 2, 3, 5, 7. Why do we go from 3 to 5? Well, you're doing well if you're following your rules and you're at 3, so go to 5. Well, then why do we not go immediately from 5 to SPX? Well, because it moves twice as fast. By going from 5 to 7 SPY contracts, you get a pretty good simulation of what you can expect when you start trading SPX. So anyway, that is that's a 20 trade challenge. And again, you can go to 920trading.com specifically for that. But hey, if you want to check us out, in our Discord, come on over. The link for that's down below. Again, it's called 920 Trading. And all the fine folks, anybody in the group, everybody in the group would be more than happy to, number one, we will welcome you, and we'll help you out in any way that we can. Okay. Now for Rick. Rick just asked the question. He said, where can you find the chart of IV on 1 minute chart? It's going to be in your options chain. So IV is going to be in your options chain depending on your brokerage. Just hit the settings, and it's gonna have like bid, ask. It's gonna have all those different things. It's gonna have bid, ask. It's gonna have your delta, so it's your Greek. So it's gonna have your delta and your gamma and all that. What I like is bid, ask, delta, bid, ask, last, delta. I don't really want gamma. I don't really care. It's important, but I don't care. And IV, implied volatility. There's no charting of IV. I don't watch the charting of IV. I just look at the IV, the specific IV, and that's going to be in the chain. That's going to be in the chain. I mean, you can chart the options themselves, but not specifically IV that I'm aware of. So I don't know. I know that it was crazy high late today, like 65, close to 70. Well, Lady Val, you are very, very welcome. And seriously, come check us out. We'd love to have you. Come check us out. Seriously. And give us a sub. Just sub. Check it out. Okay, what else? Who else has questions? Yes, you can watch the VIX. You can watch the VIX. You can. You can watch the VIX. I understand, but it would be very educational to see how it varies. Graphics are very elucidated. Yes, I agree. What's up, D-Dog? Took call at 1442. Ooh, okay, well, let's check. I know where you're going at 1442. Oh, man. Look at that. 14. Oh, look at that. So nice. That's a double cross, dude. That's double cross. 1442. Thank you, Rick. You can slow down, breathe. Oh, thank you. I'm just trying to get through everything, man. Stopped out at close below the 9. Oh, no. At 1442? Oh, right here at 1447. You closed out at 1447 on the breach back to the downside. I got you. Yep. That was the rule, man. D-Dog, that was the rule. I mean, look at what that candle was doing at 1447. Number one, it was a fat boy candle. So you had you had a lot of volume and a fat stick right there, and you breach a 9. And it's going to wait for your truth bombs to drop. It's up to you. Yep. Thank you. Seriously, thank you, Rick. I appreciate that. Let's see. Anybody else? Anybody else? Seriously, I appreciate you, Rick. I really do, man. Thanks for being here. What's up, HT? How's Nolan doing, man? How is Nolan doing there, Dan? Is he doing well? And again, I'm just waiting for more questions, folks. I'm waiting for more questions. Nolan's doing well. Good for him. Good for him. Well, he's getting ready to be busier than he's ever been in his life in just a few months. So yeah. I deliver food. We had that incredible move upward. What triggered it after 12 o'clock? Yeah, right in here, man. I think I can speculate what made it move. That's right, Dan. I understand that. Hey, Sailor! Man, what's up, Sailor? Tell him Skull. Tell him Skull. Just Skull. Skull, man. Where have you been? Yes. Good to see you. Good to see you. You check us out at 920 Trading, dude. Seriously. Come check us out. What triggered it? I don't know. I mean, we hit this midline here. Maybe it was just again, it's speculation. It's just total speculation on my part. So I don't know. I don't know, man. I don't know. Again, we hit this midline. We tested it 1, 2, 3 different times and then just took off and then just kept going and going and going. I think there was something said. It was 3 touches. Yeah, absolutely. Bing, bang, boing. And we had a cross here. We had a cross here. Third cross back to the upside. So, yeah. I mean, it was pretty nice. Pretty nice. How'd you know one candle at the end of the day was a big down candle, then climb back up, then go... Oh, I remember that. Yes. I'm going to go exactly to that trade there, Dan. It was right here. It was right here. 1423. Because I said, okay, this is what I'm looking to do at this level. I'm looking for a pullback, and then we're going to recapture and then come back down. Yes, I remember that very specifically. I don't know, man. But I do remember specifically you asking about that because I remember this play right in here. This move to the upside. We pushed through, and I think when we stopped on that first candle and got that pullback, I think it was like a 50, 60, 70 cent pullback, and then we ran back up, and then it just slammed at that level. But I do remember that, and I don't know. I think it's just probably from watching price action and understanding how the moves work or understanding how price action works. I think that's what it was, though. I think that's what it was. But I remember that. I got lucky. How's that? Man, thank you, Rick. Thank you very much. Thank you, thank you, thank you. Okay, sounds good. Sounds good, man. Yeah, anytime. And here's the thing to YouTube folks out there. Every single person in our group can call me anytime. I know, it's crazy. They have to text me first, though. That's the only thing that I ask. I took it like you said, and it worked. Good job. Good job. Unconscious competence. Yes. Oh, yeah. And that could be it. See you in the morning, Big Bass. That is true. That is true. That is true, Kyle. Yes, I know, man. I love you too. Pete, have a great evening. So if there are no other questions, folks, I'm going to go ahead and jump out of here. If you have left another question on YouTube, folks, I will respond to that question in written form as soon as I get off live. 19. Hey, thanks for being here. 19 on YouTube. Thank you, thank you, thank you. Thank you, HT. Anyway, folks, yeah, I'm getting ready. Getting ready to shut her down. So, you guys know the thing. Hey, and Kurt, thank you for checking out YouTube. Thank you, thank you, thank you. Anyway, folks, we're going to do this again tomorrow. So here's the thing for everybody in YouTube land right now. Number one, thanks for being here. I appreciate you guys very much. And again, if you want to check out the live trading Discord, again, 920 Trading. We do trades. We talk about trades all day long, every day, folks. That's what we do. And it's almost like I sound like an auctioneer at times because I'm talking through trades and I'm talking about specifically what I am looking for and talking about price action the entire day. There's not a whole lot of filler during the day. Don't lock the room tomorrow. I won't, Code. Yeah, that was all me, man. That was all me. But again, come check us out. We're going to give you that first week for free. If you like it, great. If you don't like it, okay, that's fine. We get it. We get it. Anyway, I hope everybody has a great evening. We're going to do it again tomorrow, folks. 9 o'clock Eastern time. Oh, another question. No. That's fine. Ride the 9, baby. Ride the 9. Lady Val, if she had another question, I will absolutely answer it right now. Los Tech, see you tomorrow. Thank you, Rick. I appreciate that. Thank you very much. Thank you for the kind words. I certainly appreciate that. And again, I know I get to talking pretty quick sometimes, folks. Not by design. It's just I kind of get excited. I enjoy this a lot. No, you don't have to wait 15 minutes before you put on a trade. No. If your edge presents itself, put on the trade. If your setup is there, you put on the trade. I used to wait, 10 minutes or so, and, the setup was there. It's like, I don't want to take anything because, it's too early in the day. No, if your setup is there, take it. Now, I will say this, because volatility has been super, super high lately, it's not been an issue early in the day. But if you have one of those days where your implied volatility is like 13, 14, 15%, wait. Just wait. You might not get a setup, and if you get a setup, put on the trade. But don't feel, on days of low volatility, don't feel too rushed to put on a trade. Wait, wait for some volume to be laid down, wait for some price action to kind of be established, and then take something maybe later in the day when things are a little bit more clear. But to answer the question, no, you don't have to wait 15 minutes to put on a trade. Absolutely not. Some people do. Some people wait 30 minutes. Some people say that first half hour is for, amateurs or whatever. I disagree. There are really, really good trades as long as your setup is there. As long as your setup is there. And that's exactly what Kurt just said. As long as your setup is there, you put up, and that's it. Edge, trade, no edge, no trade. But again, thanks for the question there, Val. And again, folks, I'm getting ready to get out of here because it's literally 30 minutes away from my bedtime. I get up at 4 o'clock every morning. So, yeah. Anyway, Deep Blue, Rick is going to say one more thing here, and then I'm going to jump on out of here. But again, thank you to everybody out there. Thank you. It depends on many, a few days. It really did. It really did. And it's a high volatility day. So if it's a high volatility day, yeah, if your trade's there. If it's low volatility, wait for your setup. I mean, you always wait, but wait for just a little bit. Anyway, hey, thanks for everybody for being here tonight. Thanks, Rick. I appreciate that. And Cold Lemon's coming back with one more thing. Is that one more question? Oh, Val, you are very welcome. Thanks for being here. Seriously, I appreciate you. Anyway, folks, have a great rest of the evening. We're going to do it again tomorrow. We are going to trade tomorrow. And guess what we're going to do tomorrow evening, folks? Trade reviews. We're going to do the same thing tomorrow evening. So, have a great rest of the evening, folks. And you guys know the rest. Until next time, we will see you.